we go. Okay. All right. Uh. All right. Cool. Okay. So crazy shit. Crazy. Crazy. I'm waking up, still drinking coffee. Yeah. This is seriously an emergency. Um. Like seriously. Like seriously. Um. Like fucking seriously. Like $10 drop in a 5 minute candle in pre-market type of crazy shit. All right. On the main market, on the whole market. What is it? I don't know. But however, there is a particular situation happening with Great Britain. The bank is deciding that it's going to fight inflation like we did back in 2020 by printing more money and avoiding issues until a later date, which in our case was 2 years later in 2022. Same thing we did in 2008, which basically was 2020 and now 2022. So basically, banks love to just, I don't know, brush shit under the rug and pretend it's not a problem until it's a problem. Yeah. And that's becoming a problem. A very, very, very tremendously large problem. Which means they're going to start printing more money. Or they were. I think they said they're going to stop supporting tomorrow. They've started already. They've been printing probably for the week. I believe I heard this on Friday. So they've been printing since maybe Monday. But they have told everyone they will stop printing tomorrow. Uh, let me get more details on that. Hold on. It's not enough. Uh, bank. There it is. The UK credibility crisis risks tainting the Bank of England. Explainers. Why is Bank of England acting again? What next in the UK crisis? The Bank of England again sought to stem a sharp sell-off in Britain's £2.1 trillion government bond market. Oh, they're fucking up their bond market. That's it. They're fucking up their own bond market, which means everyone's leaving their bond market and they're coming to the United States, which kind of strengthens the dollar. So which is bad because when you strengthen the dollar, it reduces the prices of things because $1 cannot buy you more things. This is the logic you kind of have to think about. So that means that SPY is going to go down in price because we are able to buy more with a single dollar of SPY. So cash has been good and might be good for, I don't know. This cash was not good until maybe a week or two ago, right? Cash was trash for the longest time. But actually, banks were hoarding a shit ton of cash for the last year, year and a half. And everyone's wondering why when everyone's saying cash is trash, right? And now all of a sudden, the US dollar, DXY, goes from 103 to 113 or some shit. Let me see. Right here. Daily. Look at this. Oh my god, it's still going. It's on another rampage up. It might make a triangle here, which is a bullish triangle, which means it's gonna go up, which means our market's gonna go down. So for the last like since August, since mid-August, we went from 104 to 114. And we're not even down. That wasn't just a spike blowout and a sell-off. This is a consistency. This is something that we've settled up here. The chart doesn't want to go back down here, not yet. So it's settling up here, creating a new support area. And normally these triangles do burst upwards, which means more pain. Which would probably mean... No, but this is a monthly span. Oh, man. Is it a monthly span? Friday, 14 October. Month and a half span. So a month and a half span will probably be stuck in this triangle on a DXY. So no big moves yet. But the SPY is acting crazy, dude. The SPY is like, this doesn't happen. This is not normal. Pre-market, how much is this? Volume, 350,000. It went, look at that. It went from 45,000 volume, people selling and buying, to 355,000 people selling and buying. We're 8:40. We're about to start. 9:39. We're about to open the market at 9. No, 9:30. We still have another hour before the market opens. 4,000, 600, 400, 500, 9,000, 5,000, 1,000, 2,000. Oh, 50, 60, 80, 90. Wow. Oh yeah, well now we're open hours. Open hours, you're gonna have big ones. Closing candle was 447,000. This not even open candle is 355,000. And that, look at how much more magnitude of change that had in pre-market. This is kind of why pre-market's a little sketchy to me. Like, who has access to it? What's the rules? And how do you prevent big dumps like this? Like, if this was prolonged over daytime, this candle would look more like this candle, because even this candle has 447,000. It's more. This candle right here has more volume than this one, right? So one person dumped on the market. 1, 2, 3, who knows? Some people dumped on the market, and now no one else can do anything about it. They can't buy fast enough. No one knows about this event. No one's prepared to buy it. It's the pre-market. Who buys in the pre-market? You know, technically anyone can buy in the pre-market, but the volume shouldn't be so crazy in the pre-market. That's kind of the idea. You want to have a consistent volume. These candles are very suspicious to me. They happen once in a while. Like someone knows something and they leave before the day is even open. Before you clock in, you know, you go to work. Before you clock in, somebody came in, or maybe the manager is leaving, and they're able to take like everyone's paycheck and leave, and then you come in later and nothing's there because you had no access before the day started, right? So in this case, that's the same fucking thing. Someone is basically like, fuck it, we're leaving. We're gonna do this in pre-market. They're gonna move the price heavy down. I mean, this is how you crash a market, man. This is how unstable shit are. This is another reason the rules are not perfect. There's a lot of bugs in the market, man. That's a bug. This is a bug. This should not be a thing. It's a bug that people use as a feature. People use this as a feature to push the market down with the same amount of price, if not even less. You know, you get a cheaper price, 447,000 volume in live daytime working hours is a tiny candle over here, and then 3/4 the price, 3/4 the volume in pre-market equals to 10 times the candle size. Like, cheaper with more magnitude? Yes, please. If I was a corrupt motherfucker, I'd be using that to my advantage. But you know what? That's kind of the point, ain't it? Who's watching that stuff? Anyway, this is bad. This is so bad, and we're not even bouncing. We're still considered very, very weak right now. We should be blowing out on the RSI, but this is even pre-market. We don't even take pre-market seriously. Normally, we look at pre-market. We're like, we're not gonna take it as a sort of, you know, solid piece of data. It's just a bunch of people waking up early or logging into the terminal in Wall Street or something. Who knows? I don't know. And then they're putting in or starting up the orders. There's some things that settle in pre-markets and after hours and things like that. So yeah, and there's a reason for it. But the live trading, I don't understand. Like, maybe set a queue, and when you set a queue of people on your limit table and you have every price that you have and how many volume for each price, you just start it off on the day of, or on the hour of 9, and then you start from the beginning and you go up. You reduce the spread, and you kind of give a good smooth start to the market. But in this case, if you let people just dig into the jar before it's open, look what's gonna happen. Someone's gonna fucking abuse it, you know. Anyway, that's crazy. That's absolutely ridiculous. That I have no words. I have no words. Oh, 19 hours ago, UK credibility. Yeah. So UK is losing credibility because of the inflation process here. Let me see exactly. Bank of England expands market intervention. Right, they're entering the market. They're going to intervene in the market. They're trying to avoid a fire sale of their market. So here's kind of the thing, right? When you're really considering, what the hell is the market? What is this economy? What is this stock market? Is it a part of capitalism? The economy of capitalism is simply the buying and selling of products between two individuals and a discussion and agreement on price. That's it. The market is a byproduct of that, in that it works on its root exactly the same. You're in a market, you're buying and selling shares, and that's kind of the root systematic meaning to the market, right? The market. The market is a product of the economy. It is not the economy, is what I'm trying to say here. The economy is the productivity of a country. The GDP would be one case scenario to compare, how are we doing productively? Productively? How are we doing with productivity? I have to rephrase that whole thing. To kind of maintain a course, in a prediction model. But when it comes to the market that we see in front of us, that's a byproduct of the economy, because in essence that has no connection to the economy. In fact, it won't predict what the economy is going through. In fact, we've been in a technical recession for the last 2 months, ever since we dropped below 20%. We have to do that twice, but that normally doesn't happen very often. Yeah, we have bounce backs, that's great, but the bounce back didn't happen. So we don't know when the recession would happen until after the fact, because we wouldn't be able to measure the lowest point in reference to our current point. If we keep getting lower and lower, where is the recession? But if we get lower and lower and lower and then quickly go back up, then we'd be like, okay, now we can see the recession has passed. So it's really difficult to predict a recession, or even to quantify yourself of whether you are in a recession or not. But the general rule is 2 quarters of GDP loss, which we are having. It's, I think, less than a 2%, between a 1 to 3%, I think 1 to 2% loss. The last two, no, it was between 0.5% was the first, and I think 0.8 or 1 was the second. So, or 0.2, I can't remember. Too many fucking numbers. Anyway, we have 2 quarters of negative growth, meaning it doesn't matter if it's a lot or a little, it's negative growth. The fundamental definition of recession has been met. The quantitative definition of a recession is when you drop below 20% of the current market, or the highest peak, and you kind of get stuck there. And you get out of the recession when you basically reverse that course and you continue on a bullish run. So technically and fundamentally, we're in a recession. However, the government likes to change the definition of what a recession is, because, smart people and books. So that's a little bit of a problem, right? That's not really going to change anything, because as far as I've seen, private investors and public investors and streamers and all kinds of different lobbies of traders, everyone, they're not taking it, they know we're in a recession. They're not taking this new definition of bullshit. So yeah. So anyway, they tried to prevent a fire sale. They started to fuck with the bond market. People left the bond market. The bond market fucked. The pound fucked. The DXY. What's the DXY doing? Oh, is it breaking out? Is that why? It might be breaking out. Ooh, it is breaking out. It broke out so early, but look at the strength. There was literally almost no red. And even the red was so minuscule and temporary. It just was a blink of an eye, and then it was like, fuck it, we're done. No, yeah, this is bad. So tomorrow's going to be a big red flag. And if not today, because people are preparing probably today for tomorrow. Tomorrow is when Great Britain stops messing with the market. God, what are they doing to the market? Buying or selling? Oh, these things Great Britain, BOE and the bond market. Tomorrow returns to UK bond. Okay, there it is. Okay, so they're buying back bonds. They're taking back pieces of paper and giving cash, right? They said, hey, you have, bond buying program, right? I have to really think about this because the logical concept of markets is so fucking messy. You have to actually think about it, put it in perspective, and then really absorb that perspective. So a bond buying program is they're buying bonds. The government is buying bonds. Well, what is a bond? A bond is a piece of paper that states some sort of value to it with an interest, and they're buying those pieces of paper back. Well, what are they exchanging it with? Well, they're exchanging it with cash. Well, what if you don't have the cash because you're in a recession or some sort of issue in the economy? You print more cash to give. So you're going to exchange printed cash with a piece of paper. You're going to hold that paper. That would mean you're kind of buying back. You know, bonds are kind of government related, so it's like a buyback program. It's like when a corporation does a buyback program on their own shares, which is why we're having a recession, by the way. Don't even get started on that idea. The buybacks, the stimulus buybacks from 2008, they're haunting us right now. Because what did companies do? They inflated the market by buying all their own shares back to strengthen their company. And this is where it really, really irks me. You know, because they state this as official material, the economy and the market are separate. A company in the economy is different from a company in the market, in the sense that not different in the retrospect of the identity, but how they are upkept, right? Obviously, a company in reality, in the market, in the economy, a company in the economy has to produce something and sell something, manage financials, and etc., right? A company in the stock market is a reflection. It's like a mirror, right? You're standing in front of a mirror. You are the economy. The mirror is the market. However, although that concept says, hey, you know, I'm looking at myself. It's a realistic image. So isn't that a reflective relationship? Yes, but have you ever been to a funny mirror house? This mirror is not stationary. This image does not stay the same. You're looking at a mirror that's molding and changing. In fact, it's changing because someone else is manipulating it. So the economy is different from the market. The market is being manipulated and changed. You can see this through mainstream media. You can see this through so many fake news and reporting and journalism and all these fines that banks and corporations get for misinformation and libel and blah, blah, blah. Anyway, we know this exists. The world's pretty fucked. But the case scenario is that this is not being checked. So, it's a fucking hassle, man. So they're bond buying back. So now they're basically stimulating by putting in more money. They're basically doing what we did in 2020. I believe we did a bond buyback program back then too, to release cash into the market. The deflationary aspect is when corporations buy bonds back, so they remove the cash. They give their cash from the bank to the government, and then they get a little piece of paper for the bond. So they're exchanging and closing out those green dollars to the government. They're holding it now, and it leaves circulation, so it kind of helps with the money supply, which in essence you would basically use that to kind of create a artificial deflationary process. But when your inflation is fucking high and your deflationary strategy is a long-term strategy, it's not a quick short-term fix. The quick short-term fix is just to do a quick hike. Just go to Congress, 5%, let's kill it, nip it in the bud, and then start reducing from there. That's how you do it. That's how we should have done it back in 2008. That's how we should have done it in 2020. And that's how we should have done it in 2022 currently. Just a quick rate, then start reducing. You rip the fucking band-aid and then you start healing, man. This is just fucked up, man. People are so fucking scared of losing their money. They're fucking up the market because they're too fucking scared to rip the fucking band-aid. Imagine that bullshit. Imagine that bullshit, right? Okay, anyway, Upstart. Upstart I've been watching. They've been doing good. Upstart is a kind of loan giving company for small companies. They can basically assist and provide margin to small companies so they can invest in themselves and grow. Which means during a recession, what happens? During a recession, big corporations struggle the most because they have to handle the most load. They have the most financial risk. They have the most financial loads and balances and employees and responsibilities and equities and commodities and estates and commercial, whatever, everything. They just have so much on their plate. 1 or half a percentage change to anything can trigger a complete meltdown in profits, in sustainability, and whatever. So big corporations have big issues when it comes. What? Upstart. Whoa, where are you going? Oh, damn. Is this also from the market effect? But that's only $2, which is comparable, and that's 7%, 8% versus 2%. Still a much bigger drop here. Damn, dude. That's a quick freaking drop. 27. Look at that. 1.5% drop in pre-market. Well, dollars. I'm dumb. 6.4%. But what is causing this? What is causing this? What? Oh, no, that's not what I wanted to do. What is causing this? How's Netflix? Netflix unhindered. What? Oh, hold on. Okay, they had a predictory? That was 2 candles before, was it? This is the 12:30 candle. No, 12:30 candle. Alright, so here's some learning material for you. Why are the markets sometimes like that? Why do you see one big red candle in one, and then you go to the main and you see a big red candle there? And if I go to kind of most of these, I'll probably see a big red candle that we're just analyzing exist. You gotta remember, when you're looking at the whole market, the reason this can happen synchronously through every single market is not that people are actually selling NVDA or Netflix, but that NVDA and Netflix are included in the SPY. So all you need to do is just sell the SPY and the other stocks get affected, right? This one wasn't interesting. This was just a jump down. I think it was just a reassessment of price. There was no middle point. So you can see this I don't think, no, Upstart is not part of this S&P 500. It's one of the new tech companies, and it's pretty small. It's not capable. Tesla just entered the S&P 500 a year and a half ago, something of that time range. A year and a half, year something. Okay, let's see. DJI, Dow Jones. How you doing, bro? Not so happy. Now you notice there's no aftermarkets or pre-markets here. That's normally judged by aftermarket is in blue, pre-market is in yellow. The DJI does not have any of those because it's a 24/7 running ticker. It doesn't have a pre-market or aftermarket, and that is a pretty big bar. This bar is sending a precedent. There's no red bar this big looking backwards. Looking backwards a month. Whoa, a month. What am I doing? These are 5-minute candles. Always be aware. Sometimes I forget which one of the freaking candles I'm looking at. Not a month. Yeah. We had a pretty... But this candle and this candle cancel out. You have to look at candles in a way where what's the cause and effect? If you can find the cause and effect, right? So the cause of this red candle is this green candle. That's not natural. This is algorithms, people buying in, excitement over the news media, blah blah blah. Phew, everything's fine, and then boom, everything's not fine the next day. If anything, the stock market represents a very good mirror on the human emotion. This is exactly what a human feels, like really sad, happy up at the peak, sad, happy, sad. Kind of logarithmic scale, you're not gonna have a perfect linear relation here. You're gonna have to scope out the locals, local hills, and then go based on those, whether you're feeling good or feeling not good. But the overall situation's pretty dire. Not so bueno. Not so bueno. We have a gap here, DJI might want to fill this. And then it's gonna drop down. We fill the previous gap here. We fill the previous gap here. We did not fill this gap, so we do have a gap there. But that's not gonna be on the way up now. It's gonna be on the way up. Most of these gaps at the top, they're probably gonna get filled when we return to a bull market. Right now, not gonna happen. Right now, bull market not existing until something drastic happens. And I've been waiting for this, and a lot of people on YouTube have. All the people that have been yelling for the last 2, 3, 4 years about recession and things, they're kind of getting a bit of a boner right now. So give it to them for standing on their track. But I mean, when you look at the data now, you can't really hide the data anymore. Before, people read data and they notice some inconsistencies and they report on it, and they'd be like, oh, there's a market crash some point in time in the future. It's like, yeah, there always will be, quote unquote, as they say. It just depends on how long in the future. But the voices have been raised very, very loudly recently. And I believe it's the spark of the whole AMC GME short squeeze thesis. I think that's causing some... Okay. Imagine... Nope, that's not it. That's not what I wanted to do. Imagine you're a bank, and you're not the only bank. You're one of many other banks. In fact, you're a small bank. You're maybe, I don't know, $1 billion. Maybe you you're just reaching that billion mark, and you're like, yeah, I'm about to play with the big boys. But, everyone's talking in the market, and they're like, hey, man, there's this thing, everyone's shorting fucking AMC right now. Like, people making money consistently. This place is going to fall apart. There's no, leadership. They're running out of money. The COVID issues are messing it up, yada, yada, yada. We're basically going to run it to the ground. So everyone and their grandmas were all shorting AMC, right? That conversation gives off a couple of vibes. One, there's no friendly endeavor here. It's a business. Hey, you make money, I make money, let's make money. Cool, all right. Right? There's no particular respect provided back and forth, right? And if you help short, then it actually goes in my favor, because it's going to get stronger of a short, because it's going to keep selling even further, right? So the more people that short, it kind of still benefits me or whoever's telling me to short. Let's say I'm telling you to short, right? So you're a bank, you're a 1 billion bank. I'm this Citadel employee, regular dude talking to you about it. And you kind of hire, you're like a junior executive somewhere up there. So you're kind of trying to get the word on what's going on in the market. And then me, this young financial advisor, comes up, it's like, hey, you work for that company, right? You just reached 1 billion. I got you an idea. You want to play with the big boys? This is what the big boys are doing right now. Q 2020, or we'll call it 2019, December, October. But consider that this has been going on for a while, right? Consider this has been going probably for a year. So let's call it beginning of 2019. I don't know how long they've been shorting this company. They've done the same thing to Toys R Us. They've done it to Blockbuster. They basically see a company that's dying, then they put up fake news, or not even fake news, but they just make a wound bleed out, right? They see a wound in the company. Instead of the company focusing on it to fix it, these journalists come out and just throw it to the public, and people are like, oh, that's fucked up. And then they leave, and then the company starts to get even weaker, right? So the strategy is that, find a weak company, attack it with news and journalism, and then short the crap out of it and get as many people on the boat. So that's what I'm doing then. That's what we're all doing. Right now, AMC. We're going to short it to the ground. We want it down. GME. In fact, they've been doing this to GME for the last 2-3 years. This company is now making people billions of dollars. So what we're going to do, you and I, in fact, you can do it yourself. You don't need me. I'm going to go back to work. Yada, yada. Go back with my business bros. And you're like, all right, let's do it. So that conversation ends. You make your decision. I have a decision. Everyone's making that basic same decision. Everyone and their grandmas, apparently. And everyone's shorting. Now is the end game, right? Now everyone has to buy back. But everyone knows the name of the game is whoever buys last loses. Whoever buys first wins. Because you buy at the lowest point. If everyone starts to flood the market buying back those shorts, there's no going back down. So they know as soon as one of the people covers, even if it's a small one, even if it's you as a 1 billion, you maybe put 100 million in shorts. Cool. You probably, good, bad, depending on where you're at. Maybe I told you this later. It'd be like, oh, AMC squeeze. Now we're gonna short it, and it's gonna make us tons of money again. And now you're on the bandwagon on round 2, right? Or round 3. So the more people that are in this game, the more consequences and risk, and then the more savagery there is involved. Because this is a game where being first is important. Okay? Being first saves you percentages, hundreds of percentages, hundreds of whatever you're dealing with. It just saves you effectively. And unless this is a long, prolonged period of time, and there's a first every day, and everyone plays nice, and if there's not enough liquidity in the market, everyone goes home and takes a nap, like whatever. If we played the rules by that game, then we have a stable market. In fact, we'll probably have a market that's more linear, straight, horizontal, maybe diagonal, going up at a slight angle, right? So if everyone played the market game that way, you'd have a bit of harmony. But everyone doesn't play that game. They play the whoever's first wins game, the survival of the fittest game, the dog eat dog world game, thesis, whatever. Anyway, my point is this. No one's covering, because once that is set off, that's going to spark something. But who's going to cover first? It's got to be the small ones. My company, Citadel, they're going to be probably one of the last ones because they got the most liquidity to back up their investment. You with your 1 billion that you just started, well, you're probably going to lose 100 million. And if you did leverage, if you did like 2-3 times leverage or anything crazy, you're going down faster. And the average leverage in the market right now is about 3 to 5. I think some go as far as 7 times. The big institutions that are too hard to fail and have the best risk management and have artificial intelligence to help their financial and blah 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 blah. They're playing high risk, high leverage, extremely high risk, and pretty high reward. But if your risk is to crash the market, is any reward worth it? Like, this is the kind of shit the business professionals don't think about. They just look at the bottom line and they go forward. It's a robotic mindset. It's the human monster that's been created within ourselves, within our culture, to follow these rules because this is the survival of the fittest. All these kind of terms that are kind of embodied or passed down or mentioned or repeated throughout history kind of get entombed in our character. And we know this is not the most efficient way to run the market, but it's good. It's really good. It's just there's so many holes in it and no one's doing shit about it because politics, and we know how politics are. So really, it's not the market's fault. It's fucked up. It's politics. It's all the old people that haven't fucking retired yet. Oh, anyway. So basically, we're at a point where we're looking for a redraw. But in order for this to happen, the theory, the thesis, and mine as well, overall, I've thought about this highly in multiple ways, and one of the really standing out ones is that AMC is not going to cover until we have some much bigger repercussions. But this is a pretty big one. This is going to set us down further. I mean, look at the daily. Did we just drop below the... Oh my god, we're entering back down. Look at that. Alright. So these were my 3 predictions. We either have a bullish recovery when the printer goes burr. That's the condition. So the money printer go burr, that means we would have had a recovery, but inflation would continue. But see, this is the thing. A recovery in the SPY, in the stock market, does not mean a recovery in the economy. This is really where people don't make and stress this enough, that the stock market is not the economy. So when you see politicians talking about, we're gonna do something specifically as far as strategy goes to boost the market to go up, the stock market to go up, which would be printing money and then these companies buying back their shares and causing more of this sort of inflated fluff of air in our market for our balloon to pop. So when they print the money, it contributes to the stock to go up, but we know with technicalities, inflation is that in itself. You know, you put more of the circulation, the demand of the dollar goes down because there's so much of it, etc., etc. But we're kind of balancing it out. The demand is going up, not so much because, again, the DXY is the demand, right? Not the demand. The value of the dollar. So it's going up, which means there is a demand for the dollar. But that's not because the dollar is doing great. That's because Great Britain's doing shit. They're fucked. They're fucked tomorrow. Tomorrow's the countdown for Great Britain to get fucked, for our dollar to fucking skyrocket. Ooh. On that note, I need some UDP. UDP was the bearish. Need to play against UDP. Meow. Oh, UDN. I need to get a call for bearish. No. Bear go down. The inverse go up. So this one I'm getting puts. I need to get some puts. I didn't get any puts yet. Maybe I can get a temporary bounce in these. But $15 is nothing. I was just playing around with that. UDN. There it is. Bearish. Options. So I'm gonna get puts. We're puts because the DXY is gonna explode. If the DXY explodes, will it be tomorrow? Can I do it for tomorrow? How much is it tomorrow? Puts. Oh, that's so sick. I mean, that's means that they're gonna expire tomorrow. No, that's stupid. That's some Wall Street bets bullshit. Let's at least do for... Let's do 16 for the next week. I'll get one here. Okay, oh wait, what time is it? 9:14. Are we open? Let me clean out some stuff. I got Goldman Sachs put because of Credit Suisse. So that's gonna be fun to watch. For those that don't know, Credit Suisse is basically bankrupt now. I wouldn't. Okay, not bankrupt. Not yet. If they go bankrupt, they'll be the European version of the Lehman Brothers. I think it was a Swiss company. Paywalls. Can we get through this one? Can we hack our way through to the Gibson? The Gibson, the Gibson, the Gibson. Where's the Gibson? Alright. Okay, I don't know my coffee, because last time, I spilled my coffee on my keyboard, and there goes $100 keyboard. Okay, deuce okay. None. Okay, step 1 good. Now, step 2. What the heck is this? Why are you so blur? Why you do? Why you do? Ah, are you text? Are you text? No, you are image. Oh, you bastards. This is an image, but it's generated from a live page. And that live page must be connected to the image URL. Probably not. I don't think so. That's not gonna do much. Okay, Fortune. Okay, you have won. Takes it a hit over investor feels. Alright. Oh, can ya give me a god? People, information should be free. Information should not determine whether you're capable of. God damn it! Can I? You know what? You know what? Oh, what about this? Can I scroll? Extra permission required. Ah, iframe. I will win. Can you get it? Can you get the iframe? No. Did not. Alright, well, I'm just gonna copy everything. Gonna go to Notepad. And this is how we get free information, you guys. Credit Suisse rocky slide continues. Shares and Credit Suisse tumbled over 8% this morning. That was. Oh god. Oh my god. What is this? What is this? What is this? What? Alright, something weird happened. Is the video card? Oh man. Can I please veil my things without having this weird spike? Why are you doing? Oh, technology, why are you so mean to me? Alright, anyway. Securities that essentially gauge market perception of a company's financial health surging to a record, indicating a deep concern. Credit Suisse gave executive talking points to reassure wealth management clients, investors. The memo. Oh, I think this is done. I think we're done here. I think this gonna be it, boys and girls. We're gonna go through the fucking tough time. Better hope.